Olix Network 18, Mission Poshan, Bhavishya Roshan. This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Fourth quarter GDP numbers came in at 7.7%, higher than the CNBC TV18 poll.
Net out agriculture and net out government spending, you actually find a softening of growth.
The Air India divestment has failed to take off.
Bypoll setback for the BJP. The party loses Kairana in UP to a united opposition and Bhandara Go India Lok Sabha seat to NCP.
We had a big move lower in stocks today on the back of fears about a trade war brewing between the U.S. and its allies.
The European Union Commission Chairman Jean-Claude Juncker says that U.S. has left EU with no choice but to proceed with a WTO dispute settlement case and additional duties on U.S. imports.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me is only Sonia Shenoy. We're missing Anuj, who is on a vacation after the results season and the May contract. Well, we are starting the June contract with rather heavy news. In the first place, the EU political problems, actually political problems everywhere. The political issue now is between the US and United States and between Canada and the European Union, with the US imposing tariffs on steel and aluminum. So that's a fresh brewing of trouble, which has kept both those sides of the Atlantic a little under the weather at this point in time. We are not even counting the Italian problem just yet. But back home, there is further political problem, and that's the Bypoll results. Yesterday, perhaps because of the F&O pressures, the market did not react, but there could be a little bit of a cloud that the party that is seen as favourable to economic growth will perhaps maybe returning with a lower majority. In any case, there is a bit of a decline in the BJP sway. And then, of course, came the big bomb in the form of Air India. I mean, not even an expression of interest, not even one expression of interest. And simultaneously, we have our colleague Tim C telling us that the government is, or at least the Niti Aayog is recommending that the Surtees kitty be sold, which is a further overhang for the market if ITC, L&T and Axis are going to find, more sales in the market. So all told, this does look like there is enough of heavy weather. Clouds hanging on the market, although the GDP numbers came in good.
Yes, in fact, I wanted to discuss that with you, Lata. Good morning. But, despite all these clouds, the market has actually gone up this week. I was just checking the Nifty. After all the volatility, is up 1.5%. The mid-caps are up about 0.5%. And a lot of quality names have seen buying. In that context, I think the cue to watch today will also be the auto sales, because another month of strong sales, and generally it's sort of the barometer of, gauging rural trends, etc. And rural growth has been really strong this time around, because the marriage season because the marriage season till mid-May was very strong. A lot of buying seen in tractors, two-wheelers, etc. So a couple of these names like M&M, Maruti, maybe even a Bajaj Auto, very good numbers expected. All of these will be in focus. But in that context, how has growth looked this time? I mean, we of course went through the fine print yesterday, but from a market standpoint, what would your takeaway be?
Well, actually not very, very positive from a market standpoint. One, of course, let's get the good news first. 7.7% quarterly GDP is the highest in 7-8 quarters. As well, the GDP numbers, at 6.7% are a tad higher than what even the RBI was forecasting at 6.6%. But if you look beneath that, what has happened? It's actually government that has done the heavy lifting. Let's pull up the private final consumption number. That's grown by just 6.6%. Not a great number. Okay, if you looked at Q3, Q4, 5.9 and 6.7, not very good. The next number, government final consumption, just compare that. The private final consumption expenditure was as low as, 5 and 6%. But look at the government final consumption expenditure coming in at 16.9%. So quite clearly, what is firing for the market? I can even go to gross fixed capital formation. That's a very good number again, 14% capital formation. I mean, we are consuming less, we are investing more. That's good. But it's very clear from the previous two numbers that it is government which is doing most of the investing. and not private sector. So that is a very important takeaway, that private sector is not firing. You may talk until kingdom come about auto sales and, you know, about what Marico and Dabur are telling you. But if you took the non-formal economy, informal economy, which GDP takes into cognizance, private sector is not firing. The second is the export numbers that just came up for you. Exports have grown at 5.6 for the year, and look at the fourth quarter, it is just a 3.6% growth, supposedly at a time when global economy is doing well. Yeah. So we are not able to take advantage of that. That again is, you know, a negative takeaway from the growth numbers. So all told, the GDP growth numbers underneath that 7.7 have some difficult takeaways. So it's not something that's going to cheer the market for sure.
Yeah, that's what even L&T told us, right? It's going to take at least 1.5 to 2 years before there is a constructive pickup in terms of private capex. And just on this point about Air India, you know, I just want to mention with 50,000 crores of debt that Air India is sitting on, and the bidders would have to take up 35,000 crores of that debt. It's no surprise that there were no takers this time around. But let's kickstart the show on that note. Lots happening today. It's the last day of the trading week. And here's a look at what our wise experts have to say as we head into trade this morning. Jim McCafferty of Nomura continues to adopt an overweight stance to Asia Pacific going into the second half of the year. He says this is mainly by virtue of their positive view on the three largest markets in the region. Outside of the big three, he has a cautious view on India, where he thinks earnings could disappoint and political uncertainty will deter new investor interest.
Okay, there's more equity advice for you in the start of a new month. Sanjeev Prasad of Kotak Institutional Equities says Q4 FY18 results were generally below expectations and resulted in moderate downgrades to their FY19, FY20 net profit estimates. Nonetheless, he expects net profits of the Nifty 50 index to grow 23% in FY19 from a lower base of FY18 post the earnings cuts in Q4 FY18 results season. He says India's macro is weak, politics uncertain and valuations rich, a potentially dangerous combination in case earnings were to disappoint. Kotak increases the weightage of HDFC by 100 basis and funds the same by taking away 60 basis points from Cipla and 40 basis points from Power Grid. So basically, he's expecting a 23% earnings growth. That's the only silver lining. If that disappoints, we had it.
Okay. All right. Well, let's do one thing. Let's get a grip on what's happening in the money markets. If we can just pull up the rupee for you, it actually held steady at that 67.40 level yesterday amidst all the macro data, the Italian uncertainty, etc. Bhaskar Panda of HDFC Bank says the US is pushing its strategy to impose tariffs on imports, and with the latest announcement regarding steel and aluminum, it has spread to Mexico, Canada and the EU. He says the dollar index is still hovering above 94 levels. He says the dollar INR pair would again be trading around 67.50. He expects the pair to trade in a range of 67.35 to 67.60 for the trading day.
All right. Now, Bhaskar Panda on the 10-year benchmark bond yield, he says as far as the yield is concerned, he would wait for the RBI policy next week. As of now, he expects the yield to trade within a range of 7.8 to 7.9. Now, that's a wide range, and yesterday it was, I think, 7.83.
All right, let's talk about the US markets, because, you know, the Dow had about a 250-point fall. We were talking about all the issues there, but Mangalam is here to tell us exactly what went wrong. Mangalam.
Well, I'll start with the alliteration. Trump trade tariffs from Thursday trounces the Wall Street. So steel, aluminum and aluminum imports from EU, Canada and Mexico take the Wall Street lower. But what's also more interesting is the response coming in from the other countries. So Canada, otherwise benign, says that they will go ahead and match Trump's trade tariff for dollar to dollar. Mexican peso, that one declined to its lowest levels since March on the back of this news, as well as in the Wall Street itself, two stocks which are more susceptible to trade war tariffs. We have the likes of Boeing as well as Caterpillar, both of them lower in trade. Remember, Boeing is the highest weight on the Dow Jones. Europe, well, they have said they will go mull action or promises WTO action over US tariffs. They call it protectionism, pure and simple. So that's the commentary coming in from both Canada as well as the Eurozone. The European markets, they were lower in trade. The biggest dragger out there was the DAX, which was down about 1.5%, led lower by a couple of luxury car makers on account of Trump trade tariff worries, as well as Deutsche Bank. That one was down 7% because Wall Street Journal reported that Deutsche Bank's US business is in troubled condition. The Italian index, that was of course in focus, absolutely flat, opened in the green, but then there are fresh coalition talks in Italy, so we'll keep an eye out on that. In Spain as well, that index was down about 1% ahead of the Prime Minister's no confidence vote today. The Asian markets, well, they opened mildly lower and now they've recovered, most of them in the green. The SGX Nifty, however, absolutely flat as we speak. In fact, it has gained now as we speak.
All right. Thank you very much for that. The SGX Nifty, for all that, is indicating a green tick. So at the moment, at least, it's not factoring in anything from the Bypolls. But let's see what the GDP numbers can do to the market. It came in better than expected. Actually, our poll had expected it to come in at about 7.4, 7.5. It came in at 7.7. That's the fourth quarter GDP. Remember, the full year was 6.7. Largely helped by a 14% surge in gross fixed capital formation. As well, FY18, as I told you, ended with 6.7%. A. Prasanna, Chief Economist at ISEC PD, joining us on the phone line. Good morning, Prasanna. Well, is this number better than expected? So good for the economy, good for the markets? Or are there some underlying negatives?
Good morning. So this number came in stronger than we expected, particularly if you see the output side, the numbers on manufacturing and construction were quite strong. Again, the government spending numbers also were on the higher side. And of course, we got the March month fiscal numbers also yesterday. So that was a bit puzzling because the central government seemed to cut back on its spending a bit in February and March. But of course, it's possible the state governments have also stepped up spending. So overall, yes, it's a positive number. But again, if you kind of strip out the government spending numbers, again, it doesn't look that great. It just means that probably the economy needs government support for some more time before the private sector is completely back on its feet.
Okay, Prasanna, hi, good morning. I'm going to come to the private sector capex, which is not firing just yet. But what about the rate hike? Are you expecting one this month?
Well, it's going to be a close call. Anyway, our view was there will be a hike by August. So at this point of time, we are veering around to a hike in June itself. But as I said, again, looking at the kind of commentary we got from the central bank and the MPC in the last minutes, it will be a close call. But what should clinch it is that both oil prices are higher and rupee has depreciated more, which means the inflation forecast should be pushed up. And like we discussed, I think broadly the growth numbers are quite comforting and suggest that the recovery is more or less complete from the twin shocks of demonetization and GST. So putting all this together and looking at what is happening elsewhere globally and in other emerging markets, I think it's an opportune time for the MPC to start withdrawal of accommodation, as they would put it.
Okay. Well, Prasanna, on a different note, on the GDP numbers, you pointed out that if you took away agriculture and you took away government, then what is left is not firing so much. If that is the case, this year we also have, of course, other headwinds like crude and probably higher interest rates as you are forecasting. So have you changed your numbers for the current year? What are you working with?
Not really. So, I mean, I still look at it as a glass half full situation. So my sense is that the recovery is still incomplete, particularly on the consumption side and again on the key segments like trade, retail trade, and financial services and real estate. So we do expect that recovery, that process to continue into this current year. So we retain our GVA estimate at 7.4 and GDP at 7.5. But yes, I agree, oil prices will be a headwind. Also, this whole trade skirmishes, right? What is happening? That's a big unknown. I mean, we know something is happening, but we are not able to put a finger on what exactly is happening because the key people who are kind of driving it are completely unpredictable and random. So in that sense, it's going to be a problem. But like I said, the momentum is quite strong in Q4, and the economy is has entered into this financial year on the back of a strong quarter. So therefore, we are quite optimistic.
Okay, I must say that's a very candid statement you made, Prasanna.
Yeah, you'll make a fine journalist, I think.
Okay, but the normalization of the economic activity has happened because of a pickup, I guess, in both public and in household capex. But private capex is just not picking up. And L&T was telling us a while back that it may take at least 1.5 to 2 years before we see a constructive recovery in private capex. What's your own sense?
That's more or less. I mean, we agree with that. But I think one key positive is that this whole resolution process is going through, which of course it's been beset by some delays. But still, I think it's a quite commendable speed with which the large cases are being resolved. Which means that many of those assets, which probably were operating at a quite low capacity utilization, those assets are being put back to work. And therefore, and it also means that corporate balance sheets are unclogged. So I would say that a lot of these building blocks are being put in place for a capex revival. And of course, you have to remember that the consumption growth also has to continue. I mean, we have 2 years of disruption, like I mentioned, because of demonetization and GST. And this year, we do expect that the consumption will have a clear runway, helped by good rains, of course, which means that more of the capacity will get used up. So yes, probably we are looking at next year as when a full-fledged private sector capex revival should gather pace.
Okay. All right. Let's hope so. Prasanna, thank you very much for joining us early morning with your thoughts. Prasanna, very positive there with a 7.4 to 7.5% GDP expectations for the current year. But that's not what several economists said yesterday. There were, I spoke with people like Sajid Chenoy and Soumyakanti Ghosh after the numbers. And their expectation is that it will be a 7.1 to 7.2% GDP because they expect that the government will not be able to spend so much in the current year. I mean, you are in election mode. Yeah. And more importantly, it's the headwinds of crude as well as higher interest rates, which, of course, the ISEC team also called out first. So higher interest rates. And even on the IBC resolution, they weren't very positive because most of the banks are under prompt corrective action. So liquidity may anyway be tight. So I got a feeling that people were, yes, it'll be better than 6.7. But 7.1, 7.2 was the consensus. And that was the statement we are getting even from Credit Suisse. We continue to believe that the best in growth is behind us, slowing government expenditure, ongoing weakness in farm prices, a reversal in trend of lending rates, and a drain on income from higher oil are headwinds. So quite a few people worried about the current year's GDP. Let's hear out some of the experts we spoke to.
I would characterize this as being strong domestic demand, government-led growth. If you look at core GVA, which is to net out agriculture and net out government spending, you actually find a softening of growth there. Growth goes from 7.4% to 7.2%, despite there being a very favorable base of just 4% in the corresponding quarter the previous year. So the private sector really hasn't, I would say, momentum has actually slowed in this particular quarter. What's very impressive, as you hinted, is government spending, that you've seen net exports continue to disappoint. Export growth in the last quarter softened, import growth is strong. In a relatively strong global environment, India is not reaping those benefits.
In fact, there are now reports in domain that the global growth, there is a new term which has been coined, is an asynchronous global growth. So I am not sure whether the global growth will be as solid as in the next couple of months, because there are reports that the Chinese exports and surveys are showing, the PMI surveys, the Chinese exports are actually slowing down for whatever reasons, because of the trade wars or others. But I think that's a worrying sign, because if the global exports start to slow down and Indian exports, given the way they are now stuck in some sort of GST refunds and other things, I think it will be a difficult thing on the part of these net exports not to act as a drag on the overall GDP number.
Lagging of export growth has been more of a domestic factor than the global factor. Global growth has been improving quarter over quarter. However, I think our key issue was the export refunds, which were lagging behind, which I believe now have begun to pick up. Exporters seem to suggest that now the refunds have come back to them, and that should hopefully start showing up in better exports. Weaker currency should also help in support importing exports. Net exports have cut back growth in the fiscal year gone by almost 1.5%, and that's true. Going forward, I think that is something that we would continue to watch out for.
Okay, guys, be prepared for a rate hike by the RBI in the month of June. At least that is the expectation that most of our market watchers and experts have. Let's take a short break on that note. We'll drill it down to the specifics, individual stocks lined up on the other side. CNBC TV18's top 10 list of stocks to watch. Hi, welcome back. Well, as we kickstart today's day, the market, the SGX Nifty is flat with a bit of a positive bias. We've actually had not such a bad week, up about 1.5%, and yesterday was good. Let's see how today shapes up. Lot of stocks to look at today. Here's the list of top 10 stocks for the day. ICICI Bank, first up, will be in focus. There are news reports indicating that, ICICI Bank, the board has asked Chanda Kochar to go on an indefinite leave. Lata, I guess this was, in the making for a while, but now that this has come through, how do you see the impact on the stock?
Well, yesterday the stock reacted negatively to even the appointment of an inquiry committee because it was seen as some uncertainty. Now with Chanda Kochar being asked to go on leave, perhaps the markets will only deepen in terms of their uncertainty. So this should be seen as a little bit of a negative for the stock. No leader at the helm. So to some extent, the markets will take it negatively till some kind of clarity emerges on leadership. But let's note that this is a Mint report, and we have merely, we have not independently been able to check. We have written to ICICI, and they haven't yet answered us.
But we were discussing about this earlier as to how once this cleanup actually happens, it would in the longer run be a positive, right, for investors, for the company, etc.
Yeah, but there is always an interregnum. And quite clearly, in the interregnum, the markets could be a little confused as to what is happening, who's in charge. Is there a dissonance between the board and the management? And therefore, uncertainty as to decisions being taken. And now banks are in a very, are in the thick of a lot of decisions. Resolutions, IBC resolutions are being discussed. So a lot of leadership is needed at this stage. So lack of a leader would mean a little bit, at least the markets will see the uncertainty as negative.
Okay, well, we'll keep tracking ICICI Bank for you. But moving on, the Niti Aayog has pulled up the Department of Investment and Public Asset Management for slow implementation of the Strategic Stake Sale Program, or SUTI as it is called. Timsi Jaipuria filed this report earlier.
Well, what government officials are indicating so far is the fact that Niti Aayog took a stock-taking meeting with DIPAM last week where they took stock of strategic stake sale program, and yes, they also pitched for an aggressive stake sale of SUTI stake, especially in L&T, ITC and Axis Bank. Now, the SUTI stake in these three accounts to about 46,000 odd crore rupees, and Niti Aayog has pulled up DIPAM that they should go for this SUTI stake sale as soon as possible. Not just this, when it comes to strategic stake sale, Niti Aayog is unhappy with the performance of DIPAM. They have asked DIPAM to go ahead on the strategic stake sale as soon as possible. There are about 24 companies which have been now put up on a fresh list to DIPAM by Niti Aayog, which also includes some majors like NTC, BHEL, then Hindustan Copper, etc., which should be put out for strategic stake sale as soon as possible. But yes, as of now, Niti Aayog has pulled up DIPAM for a poor performance when it comes to strategic stake sale program and yes, selling of SUTI stake. Let's see how soon DIPAM acts on these two parameters.
Okay, so that would be a little bit of an overhang on stocks like ITC, L&T and Axis, since there could be some supply coming in. The managements of these companies have long resisted that sale because these are, especially L&T and ITC, are only two companies without a conglomerate owning it. And you know that previous attempts have been made by Reliance to take over L&T. So if there are so many shares in the market, there is always a fear that some conglomerate wants to take over the company, and therefore this will be seen as a bit of a worry. Well, we go on to Tata Power. Yesterday, we had a conversation with the managing director. Anisha, what were the key takeaways?
Well, yes, the stock has been underperforming since year beginning. But yesterday, when we talked to the management, they talked about the diversification process. They said that they are looking to, construct around 30 to 40 electric charging vehicles, charging stations rather this year itself. They also talked about doubling the renewable capacity that has actually worked well for them. On Mundra, they say that they're committed to make it work in the long term. They're working at cost rationalization and bringing down the other operating costs as well. they say that they're talking to the state governments to make it work. Now, this is important because yesterday itself, we saw reports suggesting that Adani might go to the NCLT to protect itself from the bankruptcy proceedings. So let's see what comes out of this, but maybe it will see a positive today on back of these diversification methods that Tata Power is employing to expand its revenue growth. Back to you.
All right. Thank you very much for that, Anisha. Tata Power, of course, has been at it and maybe has better managed the Mundra problem. We have Anshu, our correspondent from New Delhi, joining us. She interviewed the Power Minister yesterday, and here are the key takeaways. Anshu.
Key highlights are that SBI and REC have submitted a plan for stress assets in the power sector. Finance Ministry's approval is awaited, and the plan is to turn around the stress assets and not sell these assets at a cheap price. The other highlight of the interview is that the coal supply issue is being monitored on a daily basis, and in the month of May, peak power demand increased to 171 gigawatt. Power Minister has also said that tariff policy draft has been uploaded for public comment, and it will ensure that inefficiencies in terms of losses made by DISCOMs will not be passed on to the consumers.
Okay, thanks a lot for that. Let's talk a little bit more about this proposed scheme for stressed assets. Let's listen into what the Power Minister had to say.
State Bank of India has come out with a scheme called Samadhan for taking care of these assets. The REC has come out with a scheme. So we have had discussions on that. After those discussions, the REC have refined that scheme and they have sent it to us. So we will have a look at it and then we'll send it across to the Ministry of Finance. I have mentioned it to the Finance Minister. Now what this will do is that this will ensure that the stressed assets are turned around in a more benign way, and the stress assets will not be sold at value which is much less than what they should be.
Okay, so that was Anshu speaking exclusively to the Power Minister. You'll of course get to hear more of that through the day.
Yeah, I think if the Power Minister is able to succeed, and he was very insistent yesterday, we'll play more parts of that conversation that he had with Anshu. If that were to succeed, then it's not just power companies, but today we should see a little bit of green on banking stocks as well. Companies like SBI, REC, PFC.
Okay, we'll keep an eye out on that. But Fortis, we continue to track that one. The board will be shortlisting the bidders today. Ekta joins in to give us the latest there. Ekta?
Yes, absolutely. So we're going to hear the number of bidders who have submitted an expression of interest. Right now, we understand that there could be around 4 bidders and the same old 4 ones that were in the race earlier. But as of now, we don't have confirmation on that. Separately, RHT Trust, which is basically the REIT listed in Singapore, interestingly, Fortis has sold a partial amount of shares in that, 18 million units, and raised around 13 million Singapore dollars. We understand because of operational needs of the company that they have done so. So that'll be interesting to watch, considering that it is one of the most important assets that the company needs to secure. So maybe they could probably buy back those shares eventually when a deal is done. So expect probably some amount of green on the stock.
Okay, thank you very much, Anisha. And finally, Mangalam is here to give us a wrap of all the other stocks in news.
Well, I have 4 stocks on my radar, Lata. See a mild green on most of them. PNC Infra, they bagged one of the EPC packages of the Nagpur-Mumbai Expressway for about 2,100 crore rupees. Remember, this came in the dying hours of trade, but officially announced post-market, so we'll keep an eye out on this one. The second one is Ashiana Housing. They've acquired close to 7 acres of land in Rajasthan to develop another housing project, so that stock should be in the focus as well. Cochin Shipyard, they've got an order for about 1 or 2 marine ambulances from the government of Kerala, so a mild positive for them as well. And finally, we have Sudarshan Chemicals. The board is likely to meet on June 1 to consider sale of one of their subsidiaries, Prescient Color. Remember, this subsidiary accounts for about 5% of the company's revenue, so not too much in terms of financial performance, but it will be very interesting to see how much money they realize from it. A mild green on that one too.
Okay, thanks a lot for that. So those are a lot of the counters that could be in focus today because of news. Here's a quick recap of our top stocks to watch. Stocks expected to gain today: SBI, REC, there's Tata Power, Fortis, PNC Infra, Ashiana Housing, there's Cochin Shipyard and Sudarshan Chemicals. While stocks that could be under pressure, ICICI Bank, of course, that'll be the big talking point. ITC, Axis Bank and L&T as well.
All right, those were stocks in India that we are going to watch out very carefully for. But here's something from the global markets. Walmart's AGM is currently underway at this point in time in Arkansas, and CNBC TV18 is the only Indian channel to be invited to the AGM. After several concerns were raised regarding the Walmart-Flipkart deal, Shireen Bhawan caught up with Judith McKenna, the president and CEO of Walmart International. Shireen began by asking her how worried she is about the resistance from investors towards this deal.
First of all, we're really excited about this transaction and very excited about being part of India in a more expanded way than we are today. We're confident in the process that will occur. We understand that there are some people who have some views about this, but we're going to comply completely with anything that the authorities ask us for, and we expect this to be a smooth process.
The only approval that you require is from the Competition Commission of India, because this transaction comes under the 100% FDI route. So is that the only approval that you require from the government?
That is the approval that we require, and that's what we're complying with, yes.
Let me talk to you about the India opportunity and specifically about what changes for Flipkart with this investment coming in. In terms of the operating structure, we're given to understand that not too much is going to change. But in terms of synergies and being able to leverage that, can you give me some sense of what the blueprint looks like over the next few months?
Yeah, so you're exactly right in terms of the operating structure. That remains as it is today. We're really confident in the team that's in place, and we want them to continue to run the business just as they do today. What we're hoping is that we can bring some support to the business, in different areas, both from Walmart into Flipkart, but Flipkart out to the rest of the world as well. And from an Indian perspective, if you think about an area like sourcing, we believe there's opportunities to globally source through Walmart for certain products, but equally, we think there's a big opportunity to source out of India back into the rest of the world. It's one of our fastest growing sourcing regions already, and we'd like to make sure that we continue to do that.
Any specific categories that you will focus on from a global sourcing perspective from India?
One of the opportunities may be around something like apparel. So what's great about Flipkart is that under the Myntra business, they already have a strong apparel business. We would like to be able to see if we could support that for them and perhaps offer them access to more progress. But everything will be done based on what the Flipkart team think is right for their customers, which is right for their market.
Speaking of the e-commerce opportunity in specific in India, and of course penetration, clearly there's a lot of headroom for more growth. What's your own sense of that? It's about 2.5% of the retail market today. What is your outlook about e-commerce in India? And in terms of investing further into Flipkart, 2 billion is what you're putting in with the option of doing another billion. What's your own sense about profitability as well?
So actually, if you think about the curves that you see around the world about how e-commerce has taken off on markets, generally they have been understated in every market where this has begun to be more developed. We think that could possibly be true for India as well. It is one of the fastest growing markets, as you know far better than I do. In terms of e-commerce, and although penetration is low, we do expect that to increase quite dramatically over the coming years. Our investment in Flipkart is a long-term investment. We're excited about the long-term future for this business, and we'll be right alongside them at every step of the way as they look to build the business, to build scale, to improve the mix of the business, and ultimately to offer service to the Indian customer.
All right, let's take a quick break on that note. But how do you approach the market start of a new series? You also have, a whole host of stocks to watch out for. Our technical experts will join in on the other side. Stay with us.